Spring has sprung, well, actually really sprung in St. George, Utah, and the real estate market is kicking into gear, guys. This is the St. George Real Estate Morning Drive.
And I mean, like,
Whoo-hoo. Guys, Chan, it's like been 90 degrees.
Yeah. I was actually talking to some guys this morning at the gym, and we're like, dude, it's not even cold out there. Like, we haven't even had frost on our windows all year. It's honestly
Nothing.
They were like, we skipped spring. I'm like, I think we might have just had spring at winter. We might have just skipped winter.
Yeah, it's the strangest thing ever. Chantry likes to ride a snowboard with this cool kid. Kids, do both kids snowboard?
No, she's never got up because the last 2 years have been so bad.
Yeah.
I didn't want to start her this year. We kept thinking we were going to go, and just never really was exciting.
You know, I ski a lot. A lot of our listeners know I ski a lot. It's been a bummer of a season. Totally. Absolutely, bar none, hands down, fewest days I've skied in certainly the last 5 years. And you know, and I skied some, listen, I got a couple of good days in there because I'm self-employed, but it was not great.
Well, we were thinking about doing that little trip up to Bryan Head, just barely.
Yeah.
And it's like 50, under 50, 60 degrees.
Yeah. We were going to do this little kind of high-level mastermind for agents at Bryan Head, like an hour and a half, 60 to 90-minute mastermind about what's working and not, and then have ski day. Got a guaranteed rate from Bryan Head for the day, a cheap lift ticket rate, and then Carson, you know, is like, hey, did you see it's going to be like 60 degrees? And I said, 60? Yeah, never mind. So we canceled it. So, guys, Chantry Abbott's here. He's with Guild Mortgage and been in our ecosystem for a long time. And one of the things we're going to talk about, well, twofold, but we're setting it up with the framework is that this is the spring real estate market, and building us around the fact that both the data and just kind of anecdotally speaking, April and May, this is when the most homes sell. Yeah. This is when the most real estate is transacted. Yeah. We now have the data. We talked about it on last week's show, Jesse and I.
And when in April and May home sales means that we're listing your house for sale now, basically.
Yes. Yeah, exactly. If you're closing in May, you had to be on the market in April. And so I want to talk about that a little bit. And Chantry, here's what's so cool about talking to a lender. See, when you talk to a realtor, yes, we're kind of on the sharp end, front end of this thing, but in a lot of cases, the lender precedes us, right? Because typically here's what will happen. A buyer will come to us and say, I want to buy a home, but we send them back to you.
Yeah.
So we're kind of step one, but then we say, well, actually go, you have a new step one that's the lender. Yeah. We're step two.
We might actually see what's going on a month before you do sometimes.
Correct. And so you're seeing what's happening in the mortgage office. You know, Chantry Guild Mortgage, they've got a little office suite right here at the Larkin Group headquarters. You know, they're here part-time. And, you know, we were recording another show. I heard Chantry and he was on the phone. He's talking to clients. He's talking to people. What are you seeing for activity?
Yeah.
Is it increasing?
Yeah. I mean, so the way I gauge it is where my processing team's at. So we take a temperature. 3 is like, I have a to-do list I will not get done today. So what's priority? 2 is like, I probably couldn't take any more, but I think I'll get it done. And 1 is like, I could take more. They're all at a 3. Meaning like, they're all like, we definitely need help prioritizing what we're doing right now because we have more people trying to get financing than we can for surely easily handle. So who's most important?
I love this. That framework is so beautiful. And translation, a ton of people have decided to buy a home. And, you know, and subsequently or coincidentally or whatever it is, they happen. In this case, they're working with Chantry and his team at Guild Mortgage. There are a lot of lenders. There are a lot of realtors.
Yeah, I mean, just mortgage applications are up. Let's put it that way.
Sure.
Part of it is spring. Okay, so the busiest 3 months of the year for us are always March, April, May here in St. George for the most part, you know.
Correct.
So it's a little bit seasonality, but it's a lot of just the market is what it is. And you and I have talked about this a month or two ago, and it's like there's no reason to believe rates are significantly going to change. And there's no real reason to believe home values are significantly going to change in most
not in the
price
short term.
Points. And something will have to happen for a big change to happen. And I think before, people were sitting on the sidelines going, we think prices are going to go down and we think rates are going to go down. And you know what? They both kind of did.
Yeah, well, let me read this. I'll read this from Housing Wire.
Yeah.
With mortgage rates near 6%, weekly housing demand rebounded as winter weather effects began fading from the data. So the East Coast had all this winter weather, but we haven't had winter weather, right?
Correct.
We've had, honestly, we say summer, we've had May weather in March.
One of my really good counterpart buddies in Ogden, great loan officer, runs a great branch, very successful, big book of business, does a great job. January was his biggest month of his whole career,
which is
in
so
Ogden,
insane. Which is
and
insane.
that's not normal. Like January in Ogden is probably usually one of his slowest months of the year.
Just kind of miserable. Yeah, because what you do is there are two things at play. Number one is it's dead of winter, typically snow and ice on the ground, and you get an inversion up there. It's just crap. This is garbage, right? You know, like who wants an inversion?
Right. So people aren't listing their house. They're not selling it. They're not.
But he was buried.
He's like,
buried.
He is like, I don't know what's going on.
Well, and here's what I think. I think specifically in northern Utah, where they had a fair winter or a mild winter, it probably did affect home sales, right?
For sure.
I go back to skiing. I have a buddies group, a ski buddies group. They're all up north. I'm the only one in St. George, right? It's a text group, and we text 7 days a week. There's something, right? And the last 2 weeks have been more like welp. It was, like the seasons.
See you guys
and
next
look,
December.
and we like the spring slushy skiing, but it's not the winter we wanted. So, a couple of data points. A lot of inventory comes on the market in spring, right? This is normal. And if we look at, this is nationwide. If we look at nationwide, the most inventory tends to hit the market in May and June. But here what happens is we have a major spike in January and February every year.
Right.
Every year. Lots of people put their home on the market. Rates are 2-day recording. Look, this is going to change anytime. Prevailing rates right now are about what? Conventional mortgage rate.
Yeah, they've bumped up just a little bit. And so a week ago, I would have said just under 6. And today I'd say just 6.25-ish on average.
I want to talk about a couple of things that people need to factor in. And they matter, but they don't matter, I think, the way they do, that people think they do. One of them is a war in Iran. Okay. Kind of a big deal, right? And is that going to freak some people out?
Yeah, and it that's what actually caused interest rates to go up a little bit. So rates
Correct.
probably went up 3/8 to 0.5% in rate. Now they've kind of settled back down to maybe being a quarter higher than they were.
Yeah. And due to what? I mean, what would cause that, right?
Fear.
Mm-hmm.
A lot of times increased spending in government spending, which can lead to, so the more spending that happens in our economy, the higher interest rates.
Yeah, just hundreds of millions of dollars per day, right? Fighting this thing.
Fear of pulling money out of the mortgage-backed securities into something a little bit safer. Those kind of main things really are the two.
Okay, so this is good. This is I love the practical analysis, right?
I mean, the crazy part is war is good for the economy. Spending happens.
Well, this is what happened in the 40s, right? And then on the heels of the war is when we decided that we wanted to start building single family homes on building lots with picket fences, which was part of the baby boom.
Yeah, exactly.
The baby boom was after World War II. Yeah. Well, there's a second factor that's actually tied to the war, and I'll give you an interesting thought about it. It's fuel prices.
Yeah.
Fuel prices are a funny thing because we've seen fuel prices go up, like $1 per gallon. Well, if you're honest, $1 per gallon didn't transform. I want to qualify this for home buyers. I'm not talking about people who are living hand to mouth and they can barely survive. Yeah, it's going to kill them. And it's a problem. I am not downplaying it. We're talking about people who are considering buying a home.
For sure.
Okay.
Yeah.
$1 a gallon is actually not going to transform their life. But here's the issue. You talked about fear. There's a trickle-down effect, and the economy goes like this. Dude, did you see gas prices?
Yeah.
Do you hear this? It starts with that kind of a statement. Yeah, and this is going on, and that's going on. We don't realize how much emotion affects the market.
Totally.
Right? People are talking, and this is wrong, and that's wrong, and I agree or I don't agree. And so when I meet with people, I had multiple appointments with sellers this week, people getting ready to sell their home. And I will say to them, I don't really care where you sit politically. The fact of the matter is we have zero control over it. And so whatever happens on the national and international stage, we are powerless.
Yeah.
So we have to make decisions about the price you ask for your home, the way that we stage it or prepare it, and the marketing that we do. We have no other control.
Right.
Oh, but what about fuel prices? What are you going to do about it?
Yeah. Right.
Nothing.
Right.
But that stuff affects real estate markets. At the same time, you use this, guys, if you just picked up a show, Chantry Abbott's here from Guild Mortgage. I'm Jeremy Larkin, the Larkin Group, KW Realty. Chantry uses this scale in his office to kind of gauge how busy they are. 3 is like our hair's on fire. 2 is, I'm slammed. Could I take more on? I don't know. 1 is we got space. Everyone in your office is at a 3.
Yeah. Yep.
So something's happening in the market. And I do think this 6% rates, look, it's the lowest rate we've seen since 22. When we dipped below 6, was it lowest rate since 22?
Yeah. Yes.
Okay.
Yep.
For our listeners out there, here's a really fun chart that I'll tell you can go find. If you just look up historical mortgage rates, the first result you'll get, it's the funniest, is the St. Louis Federal Reserve. I don't know why it is, and it is actually one of the best mortgage graphs, Chantry, on the planet. And you can just run the dial back and forth. It actually tracks mortgage rates back to 1971.
Yeah.
And then you can do it by 30 years, 20 years, 10 years, 5 years, this year, the last month. St. Louis Federal Reserve, don't ask. Federal Reserve Bank. But we're sitting on the lowest rate since 2022, which is kind of a big deal. I mean, it's almost 2% lower than it was.
Yeah.
What does 2% lower rates mean for a buyer? We always talk about a 1% rate. Let's talk about 2%. Guys, you realize in the last almost 4 years, 3 years, we saw rates hit nearly 8%.
Yeah.
So if you had rates at 7.9% and then they dropped to 5.9%, which depending on when you listen to our show, it may or may not be that way. What does a 2% drop in rate, how does it affect a buyer? We're going to give you an anecdotal version, and he's going to give you the actual mortgage math as a guy who's handled thousands of mortgages. I want to know about this. It
impacts, the first thing I'll say is I'm running the numbers on like payment difference, but it impacts your buying power. 2% let's say you've got a monthly payment in mind. We want to spend $3,000 a month. A change in rate by 2% impacts your buying power by 20%.
Yeah. So 1% is a 10% increase.
So on a $500,000 house, with rates going from 8 to 6, that means, oh my gosh, we can go now buy a $620,000 house and have the same payment.
Guys, trust me, if you're stuck at 500, you don't like what you're finding, you're going to love what you find at 620.
Totally different market almost.
That's how different the market is from 2023. We for our listeners out there in St. George and Iron County and wherever you pick this, I've got a buddy from Kanab, by the way. Last night we were on the phone. He says, every time I'm in town, I hear you on the radio. Here's our ads or whatever. Okay, what else?
On a $500,000 house, it's like $650 a month.
Yeah. Look, if you're Chantry,
$650 a month is a totally different client,
especially on a fixed income.
If somebody came to me and says, I want a $2,500 house payment, and somebody came to me and said, I want a $3,200 house payment, that's a different buyer.
Wow.
That's a big difference, really.
Yeah. And
they're buying a different house.
They are. They are buying a different house.
Yeah.
So this is the practical application. 1% decrease or increase in rate is a 10% difference in your buying power. So we're about 2% lower than we were at the peak of mortgage rates. And we had a double whammy going on. Prices had hit their highest point in history.
Right.
It's no wonder that home sales dropped by 40% in a dang year.
Yeah.
From 22 to 23, they dropped 40%.
Yeah.
Holy cow, dude. Yeah. This is crazy. Okay. What is the average person that's walking in to get a mortgage with you right now? I know average is very hard to say, but who is that? Who's that client? Like profile this person.
The first time home buyers are needing to buy a $350,000 to $400,000 house, and there's maybe a couple of them going in it together, and they can live with a $2,500 to something $2,700 payment.
Dual income.
Yeah. It's either usually two people working making $50,000 each a year. So like you got to make, the truth is, unless you have a major down payment or something, if you're like a first time home buyer and you're like, I want to buy my first house, you got to be making pretty close to $100,000 to buy a house.
You do.
You could maybe buy like a little tiny 2-bed, 1-bath condo, but like the nice townhomes or like the real starter family homes, like $100,000 a year is the entry level now.
And I'll say this. This is why we are still seeing fewer home sales annually in 2026 than we saw in the 2010s. Home sales are still lower.
Sure.
Because
affordability.
And the population's increased. The number of buyers that aged into being able to buy a home is increased. But affordability.
Yeah. And then the second client is hey, we're going to sell our house and have a couple $100,000 down. And we want to buy something in the 700 to 800 range. Yeah. That's like the next most common. You know, you do get some that are like the $1 million. That's usually kind of a bigger down, a little bit higher income earner. But like we've got middle-aged kids, maybe teenagers. We're both 10, 15 years into our career. We're making 150 to 200. We got a couple $100,000 down. They're probably buying an 800,000. Mm-hmm. I don't see the crazy high net worth people because either they use private bankers or they pay all cash, or I get all the time, I take loan applications on them and then they go talk to their stockbroker and they can pull money from their thing without closing costs or stuff like that. So very rare do I see. I do have some, but like it's pretty rare. I've got somebody that's making an insane amount of money because I'm just not really their avenue.
Yeah. Yeah. God, this is so interesting. I think people are going to really love hearing this, man. I mean, this is, what real people are doing.
You want to know the question I get asked the very most?
Yeah.
Especially from people that aren't here. They go drive around Crimson Boundaries.
Yeah, Crimson High School.
And they go, who
buys these houses?
How?
I already know what you're going to say.
What is going on in St. George? Where's the income? And you know what most of them are? Lot of very high up healthcare professionals, and big time people that their company now lets them work remote and they don't actually work in St. George. Mm-hmm. Those are the two big ones. I would
Isn't
say.
This classic? How the freak do people, but they don't say freak, explain these homes? How do they afford these homes? For sure. Yeah. I mean, I'm looking at a Homes and Land magazine, Park City in the Wasatch Mountains. There's a home right now on the cover of this magazine. It's probably $25 million. We're not there in St. George, but 2 weeks ago on our show, we talked about 2006, 2016, and 2026. We compared the decades. And in 2006, you had a marginal number of homes over 2 million, over like a small amount over 1 million, and so few over 2 million, and like one or two over 3. Yeah. Now there are right now over 2 million. There's something like 60 homes for sale.
Yeah.
It's just normal.
And $1 million house is pretty normal now. Like,
yeah.
From a loan, even we laugh about the loan limit. So if you get such a large loan, it quits being a conforming mortgage. It goes to what we call a jumbo. And jumbos are harder to qualify, sometimes more expensive. So a lot of people are trying to avoid that, even the ones that are close. That was $417,000 for like 12 years, and today it's $832,000.
So jumbo loan, yeah.
So 2006, conforming was $417,000. Now it's $832,000.
Well, and I looked at a cabin in Eden. This is kind of a ranch property. It's on 6 acres. We love Eden Valley. We have this vision of the sanctuary property for our family. Right. That would be, we'd host retreats there, professional and non-professional retreats. And again, the term was sanctuary. It's kind of like this. I mean, for lack of a better word, Jen and I, my wife, had this fully spiritual moment in the fall where we felt like, we don't know when, but it was kind of like God going, this is where you guys are going. We looked at this property and, it's well over $1 million in the Eden Valley, but they're seller financing it. And I know exactly why they are. And here's why. It is not a traditional primary residence for the average person. 6 acres with a log cabin on it. I mean, it's a very residential, regular house, 5 minutes here. Log cabin on the outside, but very much a home.
Yeah.
But it's kind of a farm.
Yeah.
Well, that's not what a traditional buyer would purchase. Investment buyers, people who want short-term rentals, are going to go buy a short-term rental or something entirely different. The resort buyers, because you have 3 ski resorts around the Ogden Valley, or around the Eden Valley.
Yeah.
They're going to go. These people have realized we're going to have to sell or finance this thing to find a buyer for our home.
Yeah.
And as a seller, they're going to make a bunch of money on the interest over the next 10 years. Yeah. A bunch.
Yeah.
right? And so I'll leave you with a thought. Chantry Abbott's here with Guild Mortgage. Rates affect buyers and sellers both. And we always think they only affect buyers, but I had a seller in my office yesterday, right there behind us in that room. And I said, they bought their home with they almost had all cash. And they bought a home. They paid $727,000 in the peak of the market. It was listed for $685,000. They paid $727,000, $42,000 over ask. Well,
in 2021 or something.
Yeah. 2022, early 2022. They were disgruntled and disappointed because what they're finding is all the homes they want to buy, they can't trade across. Well, the home is built in 2005. It's dated by those kinds of standards. Not dated like 80s, but it's 21 years old. Yeah. And I feel for them. Everything that they want that's a little newer is $800,000 to $900,000. And I said, can I share something with you? And I always just pull out bankrate.com's PITI. This is the quickest one. Yeah. Principal, interest, taxes, and insurance calculator. And I said, let's assume you sell the house for $700,000.
Yeah.
Standard buyer, they'd have to have a $180,000 down payment. First of all, how many people have a $180,000 down payment? Well, not a lot, to be honest.
Yeah.
And, or cash. And they'd be, let's say they're about 6.25% on their rate. And we're being safe. Standard stuff, your HOA fees, It's $90 a month. Plug it all in. The monthly payment was $4,100.
Right.
And they did exactly what every seller does.
Oh my gosh.
They literally, most sellers that purchased two things, either before the boom, before 21. So they purchased when rates were low, okay, or prices were low, or they purchased in 21 and their rate was 2.8%.
Yeah.
Or they purchased with cash. Yeah. They've never conceptualized what buyers are up. I've done that analysis in the last 2 years, 25 times.
Yeah. That's good. That's being a good real estate agent. You flipped the seat around and said, let's pretend you're buying this house.
Yeah. Like, guys, holy crap. I got another one that's going to sell for $925. They're going to lose money because they bought it in 21. And I did the same thing. Payment on that was like $5,500.
Right.
Or something like, I don't know what it was. It was high.
That's a lot. Yeah.
52?
Yeah.
Jeez, they bought it with cash. They never experienced the pain of the payment.
Yeah.
Chantry, how do people reach you?
You can always Google Chantry Abbott at Guild Mortgage or my cell phone. You're welcome to just literally text me, 435-979-1775, 435-979-1775.
Chantry, in our final, we got about a minute and 40 seconds. What's the number one thing that you would have consumers, buyers or sellers know right now? Just as a guy who's in the trenches.
I don't think it's a strategy to sit around and wait for the market to magically make your situation better, meaning rates or home prices, because they could get worse. I just want people to know, like, there is a chance that interest rates are higher at the end of the year than they are today. Wow. They may not be,
but people need to hear that.
They don't, and there's a chance that home prices might be higher. You know what I mean? Or you might talk to a seller and say, there's a chance home prices go down. There's a lot of things that could happen that could make home.
Again,
I could see both ways.
We got an oil battle going on and bombs being launched. A lot of things can happen. It could go either direction.
For sure.
So I love this. Waiting around is not a strategy. Waiting around is a great strategy if you need to go get more cash, right? And you don't have the cash.
And if it's like, it just doesn't make sense for us right now, that's fine. I'm talking about people that are thinking they're going to play the market.
Correct. And amen. Jeremy Larkin, Larkin Group. Visit us at gostgeorge.com, GOSTGeorge.com. Google the Larkin Group or look up Chantry, Chantry. It's a unique name. Just Google him. Hey, Chantry Abbott, Guild Mortgage. You'll find him. Over now.